Hello and welcome back to the channel, everybody. It's nice that you decided to see or to watch, however you call it and however you do it, part 100 of our VAT series. Today's topic is a voucher still, and today's specific topic will be multi-purpose vouchers. You remember that, I hope, from our introductory session concerning vouchers, that a multi-purpose voucher is a voucher where the final VAT treatment of the delivery or service in question is not yet fully clear, so that you can't assess the VAT now when you issue the voucher. That can have different reasons. For example, it can be unclear due to the fact that it's not yet clear in which state the place of service or delivery will be. For example, you have a voucher which you can hand in several states, in shops. Or it's not yet clear which tax rate will be applied because the voucher could be used for standard rate stuff or for the purchase of reduced rate things. So it might even be that if you, let's say, are a group of enterprises, or if you are a voucher portal or something like that, somebody trading in these things, might be that you issue vouchers and it's not yet clear which of 10 potential partners is going to redeem the voucher, so that it's not yet clear who will be the entrepreneur who finally renders the service or delivers the good. It might even be unclear which thing will be done at all. So that means VAT cannot yet be determined in advance. Here again, some examples. Imagine a shop issues a voucher with a value of €50 and you can use it for all goods offered by that shop. Then if that shop has also books on the shelves and DVD players or so, then it's not yet clear for which rate these things will be sold, because you have different rates in stock. If an enterprise issues a voucher which can be used for purchases in all shops of these enterprises, and if now this enterprise has shops throughout the European Union, so in other countries than Germany too, or even in the USA, then the state to which the VAT will go is not yet clear, so the rate is unclear, so the final state payment is, or treatment is unclear. Finally, or finally but last, but one, if an enterprise issues a voucher which can be redeemed at several different enterprises, so you are a franchising business. So you have many franchise partners, and now you issue vouchers, and these people can hand in your vouchers not only at your own shops but also with every franchise partner. Then it's not yet clear which enterprise will finally deliver or perform the service. And additionally, if you issue vouchers which can be used for buying services, then the place of the service depends strongly on which customer you have. So if you can't be sure that all the different imaginable place of service rules in 3A or wherever they might be lead to the same result in all potential constellations, then you also can't say how the final and correct VAT treatment of the payment will be, so you can't assess VAT, and so that makes the voucher a multi-purpose voucher, and you treat it simply as if somebody entrusted you money. So it's just seen as exchanging one means of payment, a euro bill or something like that, against another means of payment. So as if you put your money in a pay card system or in a bank account or something like that. So it's simply exchanging one kind of money against another kind of money. So issuing a VAT multi-purpose voucher has no VAT consequences at all at the moment when you issue it. So later, when it's handed in, as you regard it as simply a kind of money, then handing in a multi-purpose voucher must then be treated as if somebody presented you or gave you cash. So you must treat the redemption of the voucher as getting cash. So as if you have used this money to make a part of the payment or the whole payment which is due for the delivery service at the moment when you get it. Well, that means when you buy a multi-purpose voucher with a nominal value of €50 for this amount, for the €50, then buying the voucher has no consequence at all. So if somebody gives you an invoice for the purchase of the voucher, then the invoice will simply state voucher for €50, cash €50, VAT 0, so I charge you €50 flat. And later, when you buy a book for, let's say, €107 and use the voucher to pay a part of that amount, then you must do as if you sold that book for the whole amount. So 107 must be the gross price for the book, unchanged. And then you just explain in which kind you got the cash. So 107 is due for the delivery of the book. You got 50 in form of the voucher, and so cash to be received is the remaining 57. So that is the important idea of how a multi-purpose voucher basically functions. So we now get a logical problem if that we have a special situation, because if our multi-purpose voucher has been issued for a price which is lower than its official nominal value for which it will be redeemed, then basically the customer pays less than the nominal amount of the voucher if he later uses it to buy a good or service. Because if he got a voucher for 50 for a payment of only 30, then you can't pretend that this voucher, just by lying around, just increases its value to the official value of 50. The 50 is basically a sham. What basically happens is if you issue a multi-purpose voucher below its nominal value, at least very often that can be seen economically as an equivalent to just granting a discount in the price in a clever way so that not everybody else notices that discount. Imagine, example, an enterprise issues a multi-purpose voucher and it has a nominal value of €50, but they issue it for a price of 30 to their customers. The voucher can later redeem for anything which the enterprise has in stock, and they have food, and they have books, and they have bicycles, so you don't know the rate. That makes it a multi-purpose voucher. The customer afterwards buys the good with a price of 59.50 and uses the voucher. So the one item of unit or of kind Y has a net price of 50, the VAT will be 9.50, the gross price 59.50. He hands in the voucher, so the remaining cash amount to be paid is 9.50. However, in reality, the enterprise did never receive 59.50 due to their clever trick with the voucher. What they basically got is only 39.50 in total. And this multi-purpose voucher basically was only a way to cover up the fact that the customer here got a masked covered discount of 20 on the official price. Now VAT should normally tax everything what the entrepreneur gets as a consideration minus the VAT included therein, you know that formula. But only that. So the rules should not lead to a different final result in a case like the just mentioned one. Because if our seller had granted openly a discount to the buyer, discount 20, then the discount price of 39.50 would clearly have been the tax base. You only pay taxes for what you get. However, you mask and psychologically favorably explain how you arrive at the final price. Only the final price counts. So, for reasons of fairness, one would consider it just and fair and a good idea to value the voucher now only for the 30 euro which it has cost and not for its nominal value of 50 which is printed on it. In that case, if you did it that way, and let's not yet say that we do it this way, just this is just to bring a problem to your minds. If the seller of the good in question would only have to pay 39.50 times 19%, that would be 751. And naturally, the first consequences would be that the seller of the good or service in question now is forbidden to state a gross price of 59 on the invoice. At least he or she would not be allowed to confirm 19% of the official price as VAT, because if you confirm 9.50 on the invoice, then you state more VAT than is due under the law, and the consequence would be now you owe the full 950 to the tax office, and that would trigger the applicability of paragraph 14c USDG. So overstatement of VAT, the seller has to pay it, and the buyer doesn't get an input tax refund from the full confirmed amount, which might be very awkward in kind of if a tax inspection finds it out, which probably your bookkeeping department never saw, that the voucher had been issued below official price when it was redeemed. They will probably not know any longer. So complications wherever we look to, however, a problem which we have to deal with. However, as you know, life is never easy, so the problem might even become a bit more complex. Because it might be that you issue a voucher below the par value, so below its nominal value of 50 for a price of 30, then you get 30. However, it might be that then this multipurpose voucher is sold on to somebody else for a different price, e.g. for 35 euro. In that case, the person who finally has the voucher in his hands and uses the voucher to redeem it at the shop to buy goods or services did not pay the issuing price of 30 euro, but a price of 35. So the consumer here has now an expense of 35, but the entrepreneur only got 30. And now our question becomes a very torturing one. Which of the two amounts are we now going to select as the tax base? The Article 73A of the VAT Directive, and you know that's our guideline, not only a guideline, but a mandatory guideline. We have to stick to it. The VAT Directive just says the tax base for a voucher should be what is paid for the multi-purpose voucher. But the decisive question remains unclear. The expression doesn't say by whom paid or to whom paid. The tax base should be what is paid for the voucher, but paid to the entrepreneur or paid by the final consumer. That is left open here. So our basic problem remains: does, in a constellation like the one which I pointed out, the amount of 30 count as tax base? So what was paid to the entrepreneur who finally rendered the service or delivered the good? Or does the amount of 35 count? So that was what was paid by the final customer, the consumer. That's a very, very impressive problem. So if we compare the rule of 73A with the basic rule of 73, then we might assume that it's decisive what the entrepreneur gets, because there we have the rule that the tax base is everything that the entrepreneur gets, minus the VAT amount included therein, that even an amount which somebody else added on top but gave to the entrepreneur to deliver the service, that counts. But the idea is there, the focus is on what the entrepreneur gets. However, if we think about the VAT system, then we want to tax all the consumer expense of the final consumer. And here we would have the problem that if a means of payment is sold on from 30 for a price for 35, then this increase in the value would be tax-free if we classify it as the sale of a means of payment, because selling coins, selling bills, selling dollars, all that is free of VAT, although. So there we would have a gap in the system, and the problem is, how can we close the gap? So people relatively strongly thought about how can we try to harmonize the two approaches in a way that they no longer contradict each other and the gap might vanish. So how can that be done? That's an interesting question. And well, might be that there is an answer. Let's have an idea, a closer look. So closer look might help to get an idea. Here we have the customer, and the customer pays 30, which go to the entrepreneur in order to get the later delivery of service. And he pays additional 5 to the trader who sold him that voucher, again, in order to get the later delivery of service. Why was our customer willing to pay these €5 more than originally demanded for the voucher? And the answer is, well, he never got the opportunity to buy it for less. He probably had no chance to approach the original issuer of the voucher and to buy it there for 30, because the guy who issued the voucher just addressed the voucher trader, said, okay, you can buy some 10,000 vouchers valid for purchases in my enterprise, and you can buy them for a discount price of 30. And then you can sell them on, let's say, let's fix a price of 35. You can sell them to the final consumer for 35. So the final consumer is only willing to pay 35 because he never got and never was meant to get any lower price offer for 30. He just was meant from the beginning onwards to pay 35 for that voucher. So what economically happens or is in the background will very often be a situation that the entrepreneur says, I want to run a marketing campaign with reduced prices or vouchers. Huh? So he goes to a voucher trader and says, hey, look, I now issue a voucher with a nominal value of 50. You can buy it for a price of 30. And you sell these vouchers now on for a price of 35, or to be more liberal, for a price which you like. You can keep any amount on top of the €30 which you pay for yourself. That's basically your remuneration to bring these vouchers to customers. So basically, this is a concession which I make. I sell you the vouchers below the price which can be obtained in the market, and grant you the possibility to make a profit span in return for your efforts to bring customers to me. So basically, this profit span of the voucher trader, or even of a chain of voucher traders, is just the commission which the issuer of the voucher is willing to grant for the people who look for customers for him. So basically, it's a kind of brokering fee. So we have basically to split this up. 50 minus the amount which the final customer pays, 50 minus 35, that's 15, is the true price reduction meant to happen by the issuer of the voucher. And this is a genuine discount. It should not be taxed. And now we can interpret the other 5 reduction which is granted to the voucher trader, that this is meant as the profit span which the voucher trader is meant to get for his efforts to look for customers. So it's basically a remuneration for brokering services. Go and look for customers, bring them to me, keep your profit span. So if there is an arrangement that a voucher is issued below its par value, its nominal value, and it's handed over to somebody who can be expected to trade it, then the underlying economic nature of the transaction or constellation can be interpreted as the voucher trader is meant to act as a kind of agent for the person issuing the voucher. Look for customers for me. And the trader issues now the vouchers either in the name of the official issuer of the voucher, so then he would even officially act as an agent, or it might be he does it in his own name, but then on the behalf of the issuer of the voucher. So that comes very close to brokering service. And so his profit span comes economically very close to a brokering fee. So keep in mind that we can very often say the customer is meant from the beginning onwards by the issuer of the voucher to pay a higher price of 35. And then the idea might be that you can interpret the profit span of 5 of the voucher trader as the commission which the voucher trader is allowed to deduct from the final sales price and to keep it for himself as the remuneration for his services to look for customers for the issuer of the vouchers. So economically, again, we can try to understand what's going on or to interpret it as the issuer of the voucher expects the voucher to end up with a price of 30 plus X. He expects the voucher trader collect this money for him. And then he says, if you collect 30 plus X from the voucher sales, this 30 plus X should be mine. However, X is meant as your commission, so you can deduct that X from the amount which is basically to be handed over to me. So you can net it off again, the 35 minus the 5, which is meant for you. So that's the reason why you give me 30. Now, wherever you can interpret also the legal relationship in that way, you would have a very, very fine outcome, because then the amount which the voucher issuer gets can be interpreted as being the same as what the final consumer pays. Let's have a look. Basically, we have the issuer of the voucher, we have the trader of the voucher, or the traders of the vouchers, if they are several in a chain. The issuer of the voucher pays VAT on 35 if we say that 35 is meant to be the final voucher price to the final consumer, and that the traders are meant to charge this price finally on his behalf. So they basically act as his agents. So they have to hand over 35 to him, so he pays on 35 the VAT. He only receives 30 in cash because the traders net off their commission claim against the 35 and only hand him over the difference. However, the traders of the vouchers make a commission for their service, and they get a gross price of 5 on that, so they have to pay VAT on the 5. Now, as they do this as a service to the issuer of the voucher, they can write him an invoice about that VAT, and so the voucher trader can now claim input tax refund on the 5, on the VAT on the 5, or included in the 5. So basically, the voucher trader now pays effectively a VAT only on the net amount of 30, which he below the line keeps. And the voucher trader pays the VAT on the 5, which is his commission. And the customer, if we look on this, he pays 35 for the voucher, and this 35 is now fully taxed in the chain of entrepreneurs completely with VAT, as if cash had been used for the payment. This is a very fine way to bridge the gap between the 30 and the 35. So what the consumer pays and what the issuer of the voucher gets. And this explains why at least Germany's fiscal authorities are very keen on looking or interpreting into the legal relationship between a voucher issuer and a voucher trader, a commission business, a brokering business. They are very keen on interpreting the profit margin of a voucher trader as his remuneration for a brokering service done to the issuer of the voucher. So it might be recommendable to say, okay, then we design the legal relationship in a way that this is clearly identified, because then you have no legal problem. If you really say, I'm going to issue a voucher, and the distribution scheme or distribution channel will be I hand it over to voucher traders. So I agree with them. They are bound to issue it for a final price of 35. They can deduct a commission and they pay me 30. In that case, they act on your behalf. The price which you charge for the voucher is basically 35, the final price, which also the consumer pays. And then the voucher trader just writes you an invoice over his commission, so you avoid any breach of the system. Everything works fine. So that would be clearly preferable. The other alternative would be if you say there is no brokering idea in the chain, then you would have that basic conflict. Which of the two tax bases do you choose? And it might be if you say the voucher trader just sold on without any commission relationship and without any brokering. He just made a difference from selling a good, a claim which he got right for a higher price. Then you might have a transaction which consists in selling over a means of payment that would be free of tax, however difficult to explain. That's clearly not preferable if you see it from the desired outcome. And yeah, so that would be preferable, the first construction. However, if you look to what the final customer has to pay and say it's in an unwritten or even clearly written form, it's agreed between the people involved in the chain where the voucher is traded that basically the final price paid by the final consumer is the price for the voucher, and the people in the chain can only deduct commissions from it. That's the explanation why they pay less to the issuer of the voucher. In that case, the information what the final customer pays must be transmitted to the original issuer of the voucher. If that is not to be determined, then you have to have a kind of a default solution. What do we take as voucher's value if it's not clear for which price the final consumer was able to buy it? So we need to make sure that this information is always transmitted and also can be proven. Naturally, people might otherwise be inclined to lie about the tax basis. So German law and the VAT directive just agree on, usually it's what the voucher, what is paid for the voucher. And if that's not clear, if it can't be found out, then we take the voucher at face value, so at the nominal value. So if you sell a voucher for 50 and you can't clarify what the final customer paid for the voucher, then it's presumed, okay, to be on the safe side, to make no untaxed consume possible, that then the voucher's value will be assumed to be the nominal value. So if it's a voucher over 50, then it would be 50. So you might have a constellation where in the final effect, the issuer of the voucher then overpays the VAT on a far exaggerated price just because the necessary documentation of what happens in the chain of entrepreneurs with the voucher is missing. That's a very miserable situation. However, you can probably understand why people try to make that assumption that basically the voucher traders do brokering services to the original seller, and so they should also disclose the final price to him, because basically they fix the price or set the final price on his behalf with his permission. And with that legal construction, you can close that otherwise unavoidable gap. Okay, so let us sum up that all these things a bit. Final test if our ideas make sense, or if the legislators' ideas make sense, is probably, does the system for a multi-purpose voucher make sense when you compare the situation that you issue a 50 euro nominal value voucher for a price of only 1 euro? If you compare the tax situation there with the situation that you offer a completely for free discount voucher, which entitles you to a 50 euro discount without that you have anything to pay for it. And the answer is yes, the difference, if you properly behave, just is the VAT on the 1 euro. So if you properly deal with these kinds of vouchers, then there is no arbitrary difference between the tax situation of these very closely related, however differently categorized situations. Apart from the situation that you can't find out anymore how much money is paid for the multiple purpose voucher of 50 euro. So apart from the constellation where you behave like an idiot, um, so everything seems to be fine. And if you behave like an idiot, for example, then naturally you must suffer, because if you take in something which you accept as a payment with a value of 50 euro, and you would just be allowed to allege it has a value of only 1 euro, without having to give the proof for this, then this would open doors widely for tax fraud constellations. Yeah, naturally, as the rules for single vouchers, multiple purpose vouchers, and free discount vouchers are, or coupons are, so completely different. It's fundamentally important that you mark these different kinds of vouchers clearly when you issue them. And that is what the fiscal administration of Germany, at least, strongly recommends. Usually they say if the issuer of a voucher marks them clearly, or he should do, and then usually the others in the chain or using these vouchers can usually rely on that this classification done by the issuer of the voucher is correct, apart from situations when it's clear from all the circumstances that the classification marked on the voucher by the original issuer is clearly wrong. Usually the idea is who issues the voucher should mark it clearly as single purpose, multiple purpose, or discount voucher, and then All others in the chain will usually accept this classification as correct and treat the voucher accordingly. Good. So that should be enough for today. I thank you very much for attending this part 100 of my lecture. Oh my God, I can only apologize for talking so much about VAT. However, you should keep in mind, and probably you have already kept it in mind, otherwise you would have gone in the meantime. You should keep in mind that VAT is indeed of high importance for everybody, and that it is already or also recommendable to know about VAT even if you live in another state than Germany, because you might in the long run get into touch with German VAT obligations if you do business with Germany, and so improving your VAT knowledge is never a mistake. Thank you very much for watching. Hope to see you again sometime in the future, and till then, goodbye.